All right, what's going on, everybody? This video is going to be essentially the part two of the video I made yesterday about starting to trade options with a small account. One of the ways I mentioned was selling premium. Now, this is a more advanced topic, and if you're not aware of what selling premium is, I have, I guess, three options for you. One, you could wait until I get the videos up explaining it. I want to have it front to back. I am going to briefly explain it here, but again, not in the full depth, but we are going to discuss it. Two, here is my brokerage, Tastyworks. They have a school on it, but they also, if you even search, there's Tastyworks and even just like Tasty Trade on YouTube. There's many tutorials that they have and stuff online that you could use, and they're great. They have many tutorials that you could just look up and even YouTube in general. But yeah, those are your options. I don't know if that was three or not, but essentially what I'm going to talk about, this is going to be something for more people who have been following along, who kind of know an idea. I do talk about this in my streams while we're doing it, but we're going to go over a strategy. I tested it out on stream. I'm going to show two trades that I made on Nvidia and AMD. I made them this morning. I wanted to one talk about the strategy and show you guys. I put some real money on it. I thought it'd be cool, and it was appealing to me. And this whole idea of selling premium. So to begin, what selling premium is from the get go, it is your everything. I guess the best way to put it, think every time you bought an option contract and you lost, there was somebody who won. All the option contracts that went to zero, you bought it from somebody. So if you bought something, somebody is selling it. Now, this word comes up a lot, premium. Everyone's like, what's premium if you're new? And if you're familiar, bear with me, but it's always good to refresh, right? This is the premium is the price tag essentially. So when you're buying or selling an option, or when you're buying a call or a put, when you buy that right from somebody to buy or sell the stock, you're purchasing that contract from them. You're buying this contract. So the contract itself has a price, and then what you're agreeing on with the stock has a specific price. So the price you're paying for the contract is the premium. So when you buy a contract for 20 cents, 30 cents, that's the premium. So right here, Nvidia, whatever this put is 162. Your premium, if you bought it at 355, is $355. On this call, it'd be 150, 385, or this one, what do you got? 152, 287. You're paying somebody $287, and they're agreeing to sell you 100 shares at 152.50. So the whole idea now of what you're doing, most of what you guys have seen on the channel, and what I guess a lot of you guys are just used to day trading. Most people, most traders in general, are used to going long on stuff. So that means you guys are used to buying something, the whole buy low, sell high. That's not how it works here. The whole idea with selling premium is sell high and hope for that it goes low. So instead of buying the contract, now you're selling it. So there's specific advantages and disadvantages when you do this. And I could show you actually here. We could just go quickly over on one of these. Let's say you bought the call. Here is your advantages and disadvantages. If you made money, your maximum that you could gain is infinity, but your max loss is 287. But dang it, if you sold that call now, instead of buying it, so instead of paying someone 287, if you collected 273, or if you collected that 287, your max gain would be that 270 or 287, and then your max loss is potentially infinity. And that's assuming that contract goes up a tremendous amount. So it is riskier to a degree, but not really. I guess that's where it confuses a lot of people, because the only thing riskier is that, is your potential gain higher? Yes. But is the chances of it hitting now, is it more likely you're going to lose? No. When you sell premium, the odds are in your favor. You're acting as the bank. That's why you make less money and take on more risk, because you're going to win most of the time. So you look at the probability of profit. If you sold that option, you have a 76% chance of winning, which is pretty good, versus if you bought it, you have a 24% chance of winning. So think about, it's literally inverse. Somebody has the 76, somebody has the 24. So that all depends on if you're buying or selling. So that is the key here. And now the big dilemma that comes up with, and here are the trades I've made recently. You guys have seen me do it on stream. Amazon was up. I sold a call at one of the tops. I bought Tesla. It sucks, man. We got crushed on that. I did a spread, an awful one. But these are the trades I'm going to show you guys on AMD and Nvidia. And now the whole topic that we're going to bring up here is selling on a small account, because a lot of people are like, all right, well, I don't have a lot of money to sell, because selling this contract here, yeah, this one took like $20,000 of margin or something. You need $20,000 in your account at least, or margin capability. Some people are like, all right, I don't have that. You don't need that. What you have to do is know the stocks you're playing. So essentially, it's different strikes, different stocks and different strikes that you got to do this on. And it's trying to sell premium now, selling puts and calls. And this is a good environment when volatility is high. You could sell puts. Selling puts is safer than selling calls. But you could do this on companies. And, selling calls right now, you got to be careful if there's a bounce. But then again, you'll see. But the whole point to this strategy is that with $2,000, $3,000, I've found some companies, and I'm going to give you guys, again, NVIDIA and AMD are these companies, and use these as examples to go find. And you could play around. Here's Tastyworks. I have the link below. You guys have seen me use it. That's my referral link. You could go sign up without it, but you could do this with any brokerage too. But you could go look and see how much margin power it takes to sell these. So I'm going to show you. Let's take this NVIDIA one, for example. So this is a January 20th. I can't even see that. January 20th, 75 put. So I sold a put. So essentially, by selling the put, I'm saying that I think the stock is going to go up. So, and here's where is it? January 20th. Yeah. So somebody would be, if you thought this stock was going down, somebody's buying this put right now if they thought it was going down. So I'm selling it to them. I'm taking the money, and in return, I'm saying, okay, yeah, I'll buy NVIDIA from you for $70 a share by January 2020. So in the next 400 days, a full on year. So that is the whole thing about this. And really the strategy here is relying upon what you have to do is aim for certain stocks. If it's a lower price stock with a lower account, you can do it. You can do it on these bigger stocks. If you could get a bigger stock, really the idea is try to collect as much premium as you can. There is going to be risk with that. However, the higher price stock, the better, but the cheaper stocks are going to have lower margin requirement to sell premium. So I did it here with this one. We could go to, where was it? 70 put. So I sold this for somebody, and again, I think the probability of profit on it, again, that NVIDIA is going to end down 50% in the next year. I don't know. Hi. Oh. Whoa. What just happened? Okay. So here we could see the probability of profit if you sold that right now. Okay, not showing up. Well, we have it in the portfolio. I think what is it at? 90%. So I sold this at $289. I sold one of them, so I collected $289. Now it's $293 on the ask, $277 on the bid. So, and that's something a lot of people, the question and they ask is, if you sell an option, even whether you buy it or sell it, do you have to wait till expiration? No, you could close out at any time. So if I just buy to back this option, if I buy to close, if I could get filled anywhere between 277 and 293, I always assume the ask, but if I got filled there, then I could go and close out the position. If there's a net gain, I can. In this case, there wouldn't be unless I got filled lower than what I did between the spreads. But essentially, let's say you guys wanted to do this, we could do the 71. If you wanted to sell this option right here, your probability of profit's 92%. But now you would collect $200, and how much you would need in your account to do this? $700. So the best part about this is, let's say you had a $2,000 account. This would only take about $700 of that buying power for you to do it. Now, granted, that's like 25%, a little larger than that, but or if you had like 3,000, but it's pretty decent considering you'll get $216 premium, and that could go a long way. Now, that's not the best. Now, another one I would recommend, and again, too, here's the crazy part. With a small account and selling premium, you can take more risk, and again, don't mark my words for this. I'm completely wrong when I say this. I'm saying that as a predecessor to not make you guys go crazy. But let me tell you what I do. What I do is I go and I sell a lot. My account, is $30,000. I'll put out all $30,000 to collect the premium, just because, again, the odds of you losing and how you manage it and how it goes up against you, although it's unlimited risk to a degree, it can be managed. So that's one on NVIDIA. But again, the whole idea and the whole concept here is low margin to require. You could still collect $200 if a move did happen, or essentially the best part is, if NVIDIA goes up after a week, anything literally happens after 1, 2, 3 weeks, these contracts are going to decay. So if NVIDIA starts to bounce, especially at this moment, but before you know it, you would be able to collect 50% on this contract, even 30%, and that's going to be a good amount. That could be $40, $80, $100. Again, on a small account, you could collect that in a week, a month. This is how you provide income, or you could hold this out and close it, but you're using the time value and the theta in your favor. That's one way. The next way, or the next company I like, this is why I did it on AMD, and this one's more riskier. I sold 2-year out calls. So this is 700 days. But I sold these, and I sold 5 of them. I sold $50 calls. AMD is at 1950, but you can see here, what is it? Sell. But you could sell one of these if you guys wanted to do another 5 of these like I did. I think you would be able to. It'd be $1,000. So it'd be half your account or a third of your account, but you would be able to collect $750 in premium. I think I collected a little more on mine. How much did I get on mine? I collected $1,000. Yeah, I sold them for $2 flat. The ask is at 230, but the bid is at what? The bid is at 180. So right off the bat, if I could get it at the bid, I would be up $100. I have 5 contracts, and it's a $20 difference already. But again, that might not happen. But you see how you're making money, but you could have done that with $1,000. And this is how you could play stocks. Again, selling premium with some of these big movers when the volatility gets there and getting a move. It's relatively safe. In all of these moments, if you just sold premium while the market's jacking up, down, most of the instances it's going to be in your favor, especially if you're going far out of the money. That's the objective. Go far out of the money. As long as you have 30 days or longer, it's usually you'll be able to collect more premium. Just, here's the mathematics beyond it. Again, Tastyworks has a lot of good info on it, but you do that, you'll be good. Hopefully I haven't been ranting and this hasn't been too long-winded. So I guess I'll leave it there. Let me know the questions you have, and hopefully you get this. This stuff gets complex to a degree, but hopefully you see it's not. The whole point I'm trying to show you guys is that there is companies that you could play with a little bit amount of money, and there is strategies behind it. It's going to require a lot of time, and it's going to require, a weird risk tolerance to a degree, but paper trading with this is something you could do as well. Practice on Thinkorswim. Go practice selling premium. But this is just one of those strategies. And like I said, it's safer and easier. The next video I'm going to make, I'm going to go through all these trades. You see these trades I've made here. This account, it's done pretty well. Although this, on the first time except for this Tesla play, I've only sold premium on this account, except for Tesla and Apple. And I've lost every time I buy on these. I'm losing. But when I'm selling premium, it's winning. So you got to put that in a perspective. When it comes down to the options, you're more likely to win. So I'm going to go over that in the next video. I'm going to go through this whole account and how it worked, but this is just one approach. You guys can see there's many. Do your thing, but let me know what questions you have. Hopefully this helps. Hopefully you have a good weekend. I love you all. Stay in school.